It's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing, we'll pick out some other ones since these ones are so hard to see, but instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So this may look like a few weeks worth of time right here, but it's actually just the past 2 days broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping outward levels of support and resistance a bit easier to see. I did this one yesterday, and seeing how everything unfolded, especially this afternoon, probably won't be doing this one anymore unless something comes to life. But as it stands now, and what I was talking about, and really I kind of started off the video unintentionally talking about it, is just how small those candlesticks got, representing the tightening of a very small range, and I suppose you could still, nickel and dime it back and forth if you wanted to, but this morning actually had a very nice move, and then got halted again. I know at least a couple times, and then rolled back over, and that was kind of all she wrote. Again, I'm not saying that it's impossible to make money in that sort of range. I mean, depending on your strategy, like I said, you could nickel and dime it if you wanted to, but from kind of the overall chart perspective now, it's just basically telling us that the party seems to be over. No more of this, big crazy side, price action that, people have kind of grown accustomed to over the past couple of weeks. So want to just kind of map out a couple levels. The first level is just that pink line there. That's the 200 period simple moving average. And, from the chart perspective, you do want to see the price stay above there, from, the overall, longs perspective. If the price is going to continue up, well, then you want to see it put in higher bases. So key point there, let's say that's the current newest low it gets. Well, even where you compare it to where everything started, technically speaking, that would be a higher low. And, from the grand scheme of things, that's what you want to see. Higher lows allow for uptrends to be built. But again, a whole lot of perspective goes into this. I mean, if you're a day trader and you bought right there, or if you're a day trader and you bought right there and you wanted to sell, within 2 seconds, then yeah, then the chart in this case, not really looking that good. But from the big picture perspective, you definitely don't want to see the price fall any further below that pink line. If it does, that's essentially just representing, the chart drifting back into oblivion. So that's the key thing right now is really twofold. First, is it really going to just remain that tight of a range, or are things going to kind of wake back up next week? And then second, is the price going to just, drift back into oblivion again? And I'm defining drifting into oblivion as just getting further and further separation to the downside of that pink line. We shall see. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.